Now let's have a look at profitability management strategies. So what do we know so far? We know that income statements show the revenue and expenses for the period and allow profits to be determined. We can then use profitability ratios of GPR, NPR, and return on equity, as well as comparative ratio analysis, to make judgments on the financial performance of the business and identify areas of concern in relation to the business's profitability. We can then implement financial management strategies to improve our profitability and address those areas of concern. So if a business wants to maximize its profitability, it needs to increase the difference between revenue and expenses. To do that, they can either increase their revenue or reduce their expenses. So let's first look at how we might be able to increase our revenue. We know that our revenue is the price of products times the quantity of products that we sell. So there could be a problem with either of those aspects. If we think about the price, is the price at the right level? Does it allow costs to be covered, and does it encourage sales? So the business might need to consider its pricing strategies. Additionally, we need to consider the products that we're selling. Are we selling enough of them? Are those products that we're offering actually what customers want? And are we putting our time and resources into producing products that actually allow a sufficient profit margin to be achieved? So we might need to consider our product mix. The point here is that we really need to be aware of this high level of interdependence between improving our profitability through increases in revenue with our marketing strategies. We can also look at the expenses and how we can reduce them. We know that our expenses, we're going to have COGS, so we might find that we need to reduce our input costs. So perhaps find cheaper suppliers, buy in bulk, we might want to negotiate special deals, etc. Or alternatively, we might find that our other expenses are too high. So expenses related to running the business, whether they be our HRM costs or our marketing or our admin costs. The key here is to identify what costs we are incurring in the business, to improve our efficiency, eliminate waste, and reduce unnecessary spending. So how does all this translate into the syllabus strategies? Well, we need to talk about cost controls, specifically fixed and variable costs, cost centers, and expense minimization. And then to finish off our profitability management strategies, we need to have a look at revenue controls, specifically our marketing objectives and how we can alter them to be able to increase our revenue levels.